Welcome to Explain the Charts. Today, September 16, 2025, we're diving deep into AUDUSD, a pair making waves with recent significant movements. The currency market is buzzing with anticipation as the Federal Reserve is widely expected to announce an interest rate cut tomorrow, September 17th. Current expectations, as indicated by the CME FedWatch tool, point to a 96% chance of a 25 basis point reduction, driven by deteriorating U.S. labor market conditions and dovish comments from Fed Chair Jerome Powell. This strong likelihood of a rate cut is weakening the U.S. dollar, pushing the U.S. dollar index to a fresh 7-week low near 97.00. Meanwhile, the Reserve Bank of Australia has maintained higher interest rates, creating a divergence in monetary policy that is currently bolstering the Australian dollar. Against this backdrop, AUDUSD has surged, hitting fresh 2025 highs and a 47-week high, with prices trading firmly around the 0.6670 level. This bullish momentum has also fueled a rally in commodities, with gold prices soaring past $3,700 per troy ounce, reaching a new record high. However, not all outlooks are uniformly positive. Some experts predict AUDUSD is headed for record lows later in 2025, citing a potential global trade war under a second Donald Trump administration as a key risk factor for inflation and market stability. This long-term perspective contrasts sharply with the immediate bullish sentiment we are observing. Now, let's turn our attention to the charts to see how these fundamental drivers are translating into price action for AUDUSD. Looking at the one-day chart, we can clearly see the significant volatility experienced by AUDUSD over the past year. From May 2024, the pair saw a peak around 0.6798 in July and an even higher peak near 0.6937 in late September 2024. Following this, AUDUSD entered a notable downtrend, eventually reaching a low point around 0.6143 in January 2025. This period aligns with the news suggesting a bearish outlook for 2025 based on RBA's high rates and the Fed's earlier trimming of rates in 2024. Focusing on the period from early January 2025 to mid-February 2025, specifically from January 1, 2025 to February 15, 2025, we observe a clear reversal pattern. The market found strong support around the 0.6137 to 0.6143 level, forming a base before initiating a sustained upward move. This reversal, marked by several strong green candles, signals the beginning of the rally that has brought AUDUSD to its current elevated levels. As we shift our view back to the broader one-day time frame, we can see the consistent climb from those early 2025 lows. The current price of 0.66721 as of September 15, 2025, indeed represents a fresh 2025 high, validating the recent news reports. This sustained rally is a direct reflection of the U.S. dollar's weakness and the dovish Fed stance, making the AUD an attractive carry trade. However, the news also highlights that the pair is encountering strong resistance at the 200-week simple moving average, specifically identified at 0.6675. Our current daily close of 0.66721 is right on the cusp of this critical resistance level, indicating that a significant battle between bulls and bears is likely underway. Overbought signals, with the Relative Strength Index, RSI, near the 70 threshold, further caution against unbridled bullish enthusiasm, suggesting a potential pullback is due. For the short term, let's examine the 15-minute chart, covering the most recent data up to September 15, 2025, 23:59 Universal Time Coordinated. Here, we observe that after reaching intraday highs near 0.6674, the price has seen minor retracements, consolidating just below that 0.6675 resistance level. The choppy movement and relatively lower volume compared to daily candles suggests some indecision as traders await further catalysts, such as the upcoming Fed decision. Immediate support on this shorter time frame can be seen around the 0.6663 to 0.6665 area, corresponding to previous consolidation points. A sustained break above the 0.6675 resistance on higher volume would confirm bullish continuation, potentially targeting 0.6690 and then 0.6765, as mentioned in the news analysis. Conversely, a failure to break 0.6675 and a decisive move below the 0.6663 level could trigger a pullback, with the next significant support identified at 0.6625. Expanding our view to the 1-hour chart, albeit with data only up to September 1, 2025, provides further context to the current rally. While the very latest price action isn't visible here, the chart shows a consistent upward trend from late August into early September, reinforcing the broader bullish sentiment. This timeframe highlights the gradual accumulation of buying pressure that led to the recent daily highs. The longer-term bullish case for AUDUSD hinges on continued USD weakness, driven by the Federal Reserve's dovish monetary policy. If the Fed indeed cuts rates significantly and the RBA maintains its higher rate stance, the interest rate differential will continue to favor the AUD. Positive Australian employment data, expected on Thursday, could further bolster the AUD, reinforcing the upward trend. Additionally, Australia's strong trade ties with China could provide a buffer against global economic headwinds, especially if a new U.S. trade war emerges. However, the bearish outlook, particularly the prediction of record lows later in 2025, cannot be ignored. This would likely be triggered if the Fed signals a slower pace of cuts than anticipated, or if global trade tensions escalate dramatically, impacting commodity demand and overall risk sentiment. Any unexpected hawkish shifts from the Fed or a significant deterioration in global growth prospects could quickly reverse the current bullish trend. When considering when and what price to trade, observe the reaction around the 0.6675 resistance. A strong breakout with high volume above 0.6675 suggests momentum is with the bulls. Traders could look for an entry on a retest of this level as new support, targeting 0.6690 and potentially 0.6765. Place stop losses below immediate support levels, such as 0.6660 or 0.6625, depending on your risk tolerance and time frame. Conversely, if 0.6675 holds as resistance and we see bearish candlestick patterns, like an engulfing candle or a significant rejection wick, a short entry could be considered. The initial target for a bearish move would be 0.6625, followed by the stronger support cluster around 0.6560. Be mindful of the overbought RSI readings, as they suggest the current rally may be extended and vulnerable to a correction. Looking ahead, the Fed's policy meeting tomorrow, September 17th, is the paramount event, and its outcome will dictate much of AUDUSD's immediate direction. U.S. retail sales data today and Australian employment figures on Thursday are also important economic indicators to watch. In summary, AUDUSD is at a pivotal point, pushing against key resistance around 0.6675. The market is heavily influenced by expectations of a dovish Fed, which has been the primary catalyst for the recent rally. Important price levels to watch are the immediate resistance at 0.6675, with potential upside targets at 0.6690 and 0.6765. On the downside, critical support levels are at 0.6625 and then a stronger zone between 0.6530 and 0.6560. The likelihood of a sustained break above 0.6675 is moderately high, around 60%, if the Fed delivers a clear 25 to 50 bps rate cut and signals further dovishness. This would be reinforced by positive sentiment from Australian employment data. Conversely, a pullback from 0.6675 is also a significant possibility, perhaps 40%, especially given the overbought RSI and the proximity to a major technical resistance level. This bearish scenario would be strengthened if the Fed's announcement is less dovish than expected or if U.S. retail sales surprise to the upside, strengthening the USD. Keep a close eye on the market's reaction to tomorrow's FOMC decision and the ensuing economic data releases. These events will provide the necessary confirmation for either a continuation of the bullish trend or a significant short-term reversal. Thank you for joining us on Explain the Charts, and remember to trade wisely.